Would you be surprised to hear that banks are paying you 0.01% while keeping your 5%? Well, that's what's happening. Your bank is making thousands of dollars off your savings account while it's giving you pennies. And of course, most people have no idea they are getting ripped off in slow motion. Here's what they don't want you to know. While you're earning basically nothing on your savings, your bank is lending that exact same money out at 5, 6, even 7%. They're using your cash to make profits, and they're betting you're too busy, too lazy, or too confused to understand what's happening and move your money. This is not a theory, it's a business model. I compared 23 banks. The difference is insane. The average American has about $10,000 sitting in a regular savings account, earning 0.01%. So that's $1 per year, per $10,000. I broke down the actual numbers across 23 different banks and accounts. The difference isn't small, it's crazy. Most people don't think much about it. They think all savings accounts are the same. But the truth is that you're choosing between making $1 and making 500. Let me show you the math. You walk into Chase, Bank of America, Wells Fargo, any of the big names. They're paying you 0.01% on your savings. Some are generous and offer 0.05%. $10,000 sitting there for a year? You make $1, maybe 5 if you're lucky. Meanwhile, inflation is running at 3%. Think about that. You aren't earning money. You are losing it. Online banks like Marcus, Ally, SoFi, Wealthfront, they're actually paying 4 to 5% right now. So, with the same $10,000, you're making $400 to $500 a year. That's 50 times more than what the big banks are giving you. It's the same money, the same FDIC insurance, and the same safety. Just much better math. But here's what we never hear about. Traditional banks have branches, tellers, free coffee in the lobby, all that costs money. Online banks skip all of that. No buildings, no overhead. They pass those savings directly to you in the form of higher interest rates. It's how they operate. It's not a gimmick. What's the really interesting part? Let's say you keep $20,000 in savings for 5 years. At 0.01% with a traditional bank, you will make $10 total at 4.5% with a high-yield account. You'll end up making $5,000. That's the difference between a fancy dinner and a down payment on a car. It's the exact same money, just a different choice of savings. Everyone always asks, so what's the downside? Honest answer? It takes 2 to 3 business days to transfer money back to your checking account. That's it. That's the entire downside. If you need instant access to every dollar every second, keep a small buffer in your checking account. Everything else, move it. Today. You might be thinking, well, what if interest rates drop? And to be honest, they will eventually. That's just how it works. But even if high-yield rates drop to 2%, that's still 200 times better than what you're getting now. You're not betting on rates staying high forever. You're just refusing to accept zero when better exists. Remember those thousands your bank is making off your savings? Now you know exactly how they're doing it, and exactly how to stop them. The only question left is whether you're going to keep funding their executive bonuses or start keeping what's yours. So, decide today to move your savings to a high-yield savings account. And if you want more money breakdowns that actually matter, hit subscribe. Your bank won't tell you this stuff. I will.